Thank you for watching the CEO Barbecue. My name is Antonio, and today we'll be looking for nickel in Newfoundland, together with Adrian Smith, the CEO of First Atlantic Nickel Corp. Now, this is going to be a long one, so feel free to use the timestamps provided in the description and in the time bar to better navigate this video. Before we get into it, though, I would like to warn you that we have not received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators, because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record, because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, First Atlantic is listed as FAN, so that's FAN on the TSXV in Canada, where over the last 3 months, an average of about 360,000 shares have traded daily. The stock's 52-week high is 38 cents, and its 52-week low is 7.5 cents. With a market cap of 19 million Canadian dollars and 90 million shares outstanding, today this is a 21-cent stock with a 50 and a 200-day moving averages at respectively 26 and 18 cents. As of October 31st, which is their latest financial statement, there were 7.5 million options and 23.5 million warrants outstanding, with the majority of those warrants, so 17 million of them, being 20-cent warrants that expire on February 1 next year. All in all, the number of fully diluted shares here is about 121 million, which means an increase of about 35% in shares outstanding can be expected if all dilutive securities get exercised, which would then also result in about a 26% ownership dilution if, and that's of course always a big if, but if all dilutive securities actually get exercised. In terms of ownership, management and insiders here noted as owning about half of the company, so 53% to be specific, and then 10% is owned by a mysterious strategic investor. Moving on, I'll be looking at the financial statement as well. Again, the latest of which shows us the numbers as of October 31st, 2024. The balance sheet, that's where we'll start. The asset side of the balance sheet really at the time held $1.6 million in current assets, of which $640,000 was cash and cash equivalents, although it is worth noting that since the effective date on this financial statement, FAN has done a couple of financings. One of it, a $3 million financing happened through unsecured debt options, which will definitely be a point of discussion later on, as well as they've done a $1 million flow-through financing, which closed not too long ago, last month in April, basically. Back to the balance sheet of October, though, the liability side had in total about $1 million on it, mostly in the form of account payables to the tune of about $750,000, and about $305,000 was just flow-through share liability. So that's not actual debt. And there's a small portion of a lease liability on here as well as a long-term one, but well, really there's no long-term debt here. Moving on to the P&L for the 9 months that ended on October 31st, FAN recorded just over $1.5 million in total G&A expenses, although that does include $600,000 worth of share-based payments and some depreciations. So those are not actual out-of-pocket costs for the company, which leaves them at about $970,000 for the 9-month G&A, which would put them at about an average of $110,000 a month. Roughly 43% of that spent went toward consulting fees, professional fees, and management fees, and then another 43% went toward marketing, travel, and promotion, leaving about 17% or so to be accounted for by what I call bankers, lawyers, and accountants. As to the exploration expenses, those get capitalized here. So it is note 4 that provides more insight into that. And I see a total additions for the period that came up to about $1.5 million. The largest chunk of that spent was geological work, which costed the company about $500,000, or about 40% of the overall spend, which makes sense as they were preparing for a drill program at the time. And so did field work, samples, and supplies, which accounted for a bit less, about 35% of the cost, whereas travel and professional fees related to geological work, they accounted for another 13 or so percent, with a few smaller expenses making up the rest. So now recapping the P&L here in two ratios. First of all, the exploration to administration ratio was close to 1 to 1. It was about 1.3 to 1, which means that for that specific period, about 57% of the money spent over the last 9 months went toward exploration and 43% toward administration. The second ratio I typically give here is the drilling to marketing ratio, but there was no drilling expense recorded for this specific 9 month period, as the company did not drill over those specific 9 months again. So if you want to get a better idea of what that looked like, you're going to have to wait for the full year financials, hopefully sometime soon, because they have been drilling since. And thus, both the exploration to administration ratio and the drilling to marketing ratios will look different when you account for the rest of 2024 and really what's been happening over 2025 as well. So, yeah, as always, I do encourage you to go to setterplus.ca and analyze the official filings yourself. Moving on to a very brief summary of the projects here before it's finally time for me to shut up. The primary focus is on exploring for large-scale Awaruite-bearing ultramafic rocks at the Atlantic Nickel Project, which is again located in central Newfoundland, where as part of the first phase drilling, First Atlantic announced most recently the third hole, and that was a 366-meter hole that intersected an average of 0.23% nickel and 0.31% chromium, bringing the width of the mineralized zone, which they call RPM, to about 500 meters, with visible coarse-grained Awaruite observed throughout this third hole of the program, with hole 2 having similar, looking almost the same, and already having done having gone through some DTR metallurgical work on it, which came up with an average magnetic concentration of 1.3% nickel and almost 2% chromium. Now, all of that is planned to be followed up with a phase 2 drill program, which intends to expand mineralization both along strike as well as at depth, and that, of course, will be part of the discussion later today as well. But for that to happen, again, I'll have to work towards shutting up already. So, Adrian, giving you the word here. Thank you so much for being here today.
Yeah, no, thanks for having me. That's a pretty good deep dive initial overview of the company. And yeah, like you said, I mean, we're focused on this very unique, large scale project that has this natural nickel iron alloy that doesn't need to be smelted. I mean, that's a huge factor in what we're doing, and it's what makes this project extremely unique. And we're excited about phase 2 that's just about to get underway here. So lots to talk about.
There is lots to talk about, and the pleasure is all mine, of course. But since this is your first time on the barbecue, before we actually get into talking about the Awaruite, which I am looking forward to, there's a couple of obligatory smell test questions that we have to go through first. Starting off with yourself, who are you? Why do you think you're the right man for the job?
So my background is as a technical geologist. Spent many years working in producing mines, underground mines, and mostly in Canada. From there, I progressed into more of a management role, overseeing programs really like focused on expanding resources. That's the main aspect of what my involvement in the industry has been is doing drilling programs and expanding resources. So moved from doing that underground in active mining scenarios where we're actually building resources to extend the mine life, and then moved that into the exploration side of things. So out in the ground, finding, making new discoveries, doing all different kinds of surveys to try and identify targets that similar to this, have a smell test, they pass the smell test. And once you do that, they warrant drilling additional work to eventually build up into an additional resource. And so I spent many years doing that. Gradually, that transitioned from the management side of it into directorship roles, really having for me the ability to be selective on where I want to apply my time and add value. And that decision needs to come from the top. And so that's kind of where I moved. I moved up in the ranks and started acting as directors of public companies, being part of the decision making for which projects that we want to advance and which projects deserve to have capital expenditures made on them. So that progressed into senior officer roles and eventually into my role with First Atlantic, where I am the CEO and overseeing the technical team and ensuring that these projects are passing the smell test and getting the work that they deserve. And if they don't pass the smell test, then we move on and we find ones that do. And so I think in this case we've found one that definitely is worthy of additional work, and we're seeing that in the population of my experience and my connections within the industry that have led us to this point, and also enabled me to bring together a team with that can build on my experience. So.
So you got more decision power, and then you decided to get into nickel in the thaw of a pricing market. It's an interesting strategy, which we'll talk about as well. But I do see, Adrian, that you've taken a couple of positions with other companies as well as a director. Is First Atlantic the only company you're an executive of, though, or like how much of your time would you say is dedicated to First Atlantic?
Well, as First Atlantic grows, it consumes more and more of my time. And that's a good thing, right? That's what you want. You want to be able to get into a position where things are getting busy and are demanding of your time. And that's kind of a relationship with success of these projects is the more success you have, the more work there is to do around it. As far as my other positions, it's part of being within the mining network, and it's being involved in other companies allows you to continue to have those relationships with the industry as a whole. And through those relationships, for example, I was able to bring on a gentleman named Ron Britton, Dr. Ron Britton, who's responsible for the discovery of another similar deposit that has, I think, 10 billion pounds of nickel contained. And, he's written articles in the scientific literature. He's considered a world expert on this specific style of mineralization. And, utilizing those relationships has allowed me to connect and bring on that kind of talent. So it's for me, the majority of my time by far is focused on First Atlantic, and the rest is dedicated to maintain relationships and stay connected with the industry in order to help advance the company's network over time.
Talk to me more about your technical team. Who else is on there? Have they worked and been successful in similar geologies before, or is it mostly Dr. Ron that you're relying on?
Well, Dr. Ron Britton is instrumental in the success that we've had. He's very engaged in the work program side of things. He's enjoys spending time on the project with the crew, training the new staff. Obviously, this is a field program where we're out camping and trenching around in the bush to try and find uh, you know, buried metals in the ground. And so he's been a huge component in that, taking several of these younger geologists under his wing and showing them using his experience exactly what we need to be looking for and kind of what qualifies as being good mineralization in this context. In addition to him, we do have a gentleman on our team that is the project geologist by the name of Michael Pillar, and he had experience specifically with Awaruite in university. He's based in Newfoundland, so very convenient for being a local talent and having a network of other professionals in Newfoundland that we can draw on for doing additional work. And his experience specifically goes back, and this could be a bit of a longer story, but goes back to when Cliffs Natural Resources had involvement in this project. He actually worked with the university, funded by Cliffs, in researching the formation of a Awaruite on this project, on this Atlantic nickel project that we now have. So a long history with the experience and the personnel and the people around this project.
moving on from management and team background to insider incentives here. As I mentioned at the beginning, insider ownership, about half of the company, 53%. How much of that is you personally?
I think that number is a little outdated. That I'm not sure where you pulled that from, but that's the company's grown. It's done several financings along the way, including bringing in strategic and financing for the recent drilling program that we've accomplished. I put myself in the under 10% range, um, but there are other insiders and strategic partners that are large shareholders running around that 5 to 10% range. Uh, Obviously, the strategic is kind of like the big one that we've been dangling out there, but we do have an NDA with them and are unable to disclose their identity.
Hmm.
I'm hoping and as we progress that we will be able to disclose uh, their information as they continue to grow their stake in the company. So that's part of our forward-looking and future plans.
I was planning on pushing you a little bit on that, but you've already shut me down, which is interesting. I am looking at your presentation, the latest of which I pulled up on the website. So it still says 53% insider ownership. What do you think the insider ownership is right now, like total insider ownership?
It's closer to 30, I would say,
Okay.
just with the dilution. So yeah, thanks for pointing that out. We are continuously updating our content, and it's the constant battle of as we continue to evolve as a small company to keep everything up to date. So duly noted, I'll definitely
No
look into
worries. I
getting that.
think you can. I'm just being lazy here because I could go to SETI myself and then and calculate the insider ownership if I want the specific numbers. So no worries at all on that. That's just all me. Where the shares that you own right now, you said about 10% of the company you own yourself. Is that bought in the open market and financings, or is it mostly through founder shares that you got that position?
So when I came onto this the management side of First Atlantic, it was an existing company. I wasn't part of the founding of the company, so all of the shares that I own were bought through private placements or in the open market. So there was really no initial founders round. There's no stock that's priced in, at a penny or less. That just didn't happen. We've been running with this company since 2020, I believe I came on board. There was one rollback prior to starting the nickel focused angle. And really, that was in order to give the company a fresh start. Going from, I think previously I had dabbled in oil and gas prior to my involvement. We did some initial exploration on the gold side, drilled many holes, and just the mineralization just wasn't there. So nothing, nothing you can do about that. When Mother Nature doesn't give you what you want in the ground, you have to be able to move on. So that's what we did, and we started focusing on nickel in Newfoundland because Newfoundland is extremely good jurisdiction. We actually started on a project up near Voisey's Bay on a higher grade nickel project, but the logistics of that project in that area are extremely difficult. The operating time is a few months per year, and we really wanted to be able to sink our teeth into something more significant scale that we could operate on year round. And that's what we've been able to put together. It took some time to compile this massive land package. I mean, we're talking like the anomaly that we talk about is 30 kilometers long, not the property. The
Hmm.
anomaly is 30 kilometers long. So massive scale, really unique mineralization. I think we've assembled a team to chase that down that is probably, a handful of the world's most experienced people on this style of mineralization.
Hmm.
So I think we've through that, process of rebirth and growth, we've kind of been able to capture something really unique here.
We'll definitely get to the part where we talk about the history of the ass and how you got your hands on it in the first place there for a second. But what is it? What's the average price of the shares that you own right now? Do you know that off the top of your head?
Uh, I mean, I'm always averaging up, I would say, but the most financings were done between 10 and 14 cents. Since then, we've done flow through financings which are always, for our recent ones have always been done at a premium. So the recent one that we were just able to close, people get confused about the way these things are priced because they are unique tax incentive kind of instruments. So they were priced at 49 cents, and the underwritten cost from the actual share purchasers was 32 cents.
Yeah.
So that was the most recent one that we closed last month, and that enables us to capture obviously more capital for the company while issuing less shares. And the caveat is that money is designated, has to be spent in the ground on the project, which we're more than happy to oblige to.
Were you part of the end buyers of those of that FT of the Fluid 3 shares?
Previous one, this recent one was one buyer, and it was our strategic partner.
That makes sense. I do see though in your SETI filings that you bought some shares in the open market last year. Do you have the ability and the desire to be buying in the open market this year as well? And future financings, are you going to be there financing the company alongside shareholders?
Yeah, I will. Absolutely. I believe in this project, and I want to put my money where my mouth is, but that everything, it goes towards the project, right? Like this is a full-time job for me, and I have a lot of belief that this project is extremely unique and rare, and that it has the opportunity to drive, significant value for, it's twofold, right? One side is you want to make money, you want to invest in something, and you want that investment to go up. As a professional, you want your project, if you have a belief in it, you want that project to be successful. So I do believe that this project has an extremely good chance of being successful based on all of the information and work that we've done in the last year or so. So as we continue to go, I think you'll continue to see insiders participate.
To go back to that 10% ownership of the strategic, again, yeah, I understand you're not able to tell me who it is, but do they get any other rights besides being a shareholder, like a board seat potentially at a certain point in the future, or a ROFR or anything like that?
So they do have an investor rights agreement that is primarily structured so that they are included in additional financing. So they have the right to maintain their 9.9%. And they do have the right to take a board seat if they choose to. So we've had conversations with them about this. I mean, I would be thrilled to have them step onto a board position because that would bring an immense amount of credibility. And again, I can't get too much into this, but that interest, and that when their interest is at a greater percentage ownership of the company, then they would, have more involvement and potentially step on with a board seat. So the rights are there. I do believe they have the right to actually go to 19.9%. So, for me and for what I tell a lot of our investors is just be patient and give it time. I think that, we will see that relationship grow.
Hmm. Patience is not one of my virtues. And if you ask my wife, I don't have many of those anyways. So, do you or any of your colleagues personally own a royalty on any of these projects?
No, this was a project that was put together uh, through maybe 10 different options over a period of 6 months. So a little background on the story just to get into it. I don't know how deep you want me to go here, but I can go very deep. Like it all kind of comes back to say 10 plus years ago when I was sitting on a patio with one of my good friends who was involved in a project in British Columbia that's a very similar project. And he was showing me about Awaruite, about this unique nickel iron alloy that can be extracted using magnets. And it kind of was over my head at that point, but this was my introduction to it. So it's always kind of been there. Fast forward to 2 years ago, we had this opportunity where we're nickel focused company. We're looking for assets. We're looking for like, the way that the industry is going is that scale is everything. If you want to get majors involved or big institutions involved, you need to have something that can last for 50 years, that has little variability and just, have that scale to it. So having these small projects doesn't really move the needle for a lot of the big companies. So my geologist at the time, Mike Pillar, had previously had um, his he did his thesis in university on Awaruite, and he brought this as an opportunity forward. But he said it's not available. It's taken, it's scattered ownership, but it's big, and it's in central Newfoundland, and you can work on it all year round. There's like close to road access, close to major power infrastructure, uh, you know, close enough to major cities or major centers, but not close enough that it's going to be a problem. So really like in a pretty sweet butter zone there. And so we started looking at it, and before we actually pulled the trigger to go and start amalgamating and building the land package, I went back to my connection that had done work on this project with the other company in BC over 10 years ago. And he looked at it and he said, yeah, like this checks all the box. This has got the size, it's got the right mineralogy, it's got, at that stage it didn't have any validation, but it had all the right indications. So that was number one. And we were actually reviewing the work that was done by Cliffs Natural Resources. And so Cliffs built up a national portfolio of specific projects looking for this alloy because they brought to the table this technology, this magnetic separation technology, to say, hey, we don't have to produce nickel in the conventional way. We can do it way more effectively by just separating the nickel out using magnets. And that was like revolutionary to nickel mining, and that's going to be revolutionary, and that's what no one's done yet, but that's what we're proposing is done here. There's other companies that are advancing this technology, and we're very grateful that they've been able to lead the way, and we're using a lot of their knowledge that they've learned over the years. But essentially, it was that report and that indication that this company had done all this work. And so we were able to take that, go through the list of all these different projects and say, hey, like, look, this one's huge and it's top priority on their list. And since then, Cliffs had problems in iron ore mining in Canada. They left Canada. They dropped all this
Hmm.
property, and all this particular one, this Atlantic nickel project, actually went back to individual prospectors that owned it. So we had to come in initially, and we had to do deals with all the little different pieces. It took us about 6 months to go through that and convince people. Luckily for us, no one really knew what we were doing or knew that there was like a significant potential source of nickel here. Some of the claims were held because of the chromium. Some of the claims were held because there's some gold sniffs. Um, and then there's also another project nearby looking for copper. So some of the claims were held for copper. So we came in, we were very stealth and strategic about it, but we had to do a ton of option agreements and spend a bunch of time to amalgamate this property. So yeah, there are royalties, there are payments due, but it was done in a way that I think we did it pretty efficiently, and we got pretty fair deals on the properties. There's not a huge amount of payments remaining. I think there's maybe in the order of $300,000 over the next few years in payments, and the issuance of maybe 3 million shares in order to seal. We have the right to do that. It's just in order to fully execute on those agreements, which we obviously plan to do.
Why did nobody think of it before you did, though? I mean, Awaruite in that specific region, again, you said people are looking for gold, looking for copper. If it's as good as you hope it to be, how come nobody beat you to it?
Well, I think that we weren't the first ones, but when Cliffs Resources, who was a partner of the BC company at the time, went bankrupt on I think it was the Bloom Lake mine. It was a Bloom Lake iron mine in what is it, in Quebec. They basically pulled out and dropped everything, and that was kind of like 10 years ago. It was kind of a shock, and the market was going into recession, and it just kind of put everything on hold, right? Like people just were kind of stunned that such a big company would just walk away from everything. So it wasn't about all these other projects. They just made a corporate decision to leave, period, right? So they dropped everything. Um, and yeah, I mean, it was something that was not well had the right just had enough information that you could glean the potential from it. It wasn't obvious. They hadn't made any discoveries here. They just showed that of all of these different ultramafic complexes, this one in particular is special. And again, it comes back to that the sulfur content and the size and the scale really make it unique.
Right. I want to talk about, and I'm glad that we went through the history of the acid here a little bit, but I want to talk about its potential future and specifically what you do with it, as in what's the business case for you here? I mean, you make a discovery, you start looking for a potential buyer, or what's the end game for you?
Yeah, so the stage step one is to build out the resource. So we have certain milestones, and I think we're already into the avenue where we have a potential exit strategy, but that's in the future. Right now, we're focused on building out the resource. I'd say we have internal milestones of numbers that we want to get into. Unfortunately, under the regulatory environment that we're in, I can't share numbers and economics until we produce an actual economic study and have those publicly released. But I can tell you that we do run our own internal numbers. One of the things that I think can say is that our initial kind of proof of concept step was to get to 500 million tons of mineralized material.
Mhm.
And when you start to block that out, it's a volume calculation. You know the density of the rock, how many meters wide, how many meters long, and how deep it is. So I think that we're getting very close to that already with the work that we've done when you just look at the initial drill program. And then the secondary milestone that we're now working on, and it's now part of the phase two that we're initiating right now, is going to be to get to 1 billion tons of contained material
Mhm.
within, and we're looking at this from an economic standpoint, as in what do you need to make a successful mining operation, and then let's work backwards from there. We know we have the material that can be processed extremely easily without the need to be smeltered, and we know what the, I guess, volumes and capabilities of open pit mining are. So we're merging those two, and we're working out what the numbers need to be, and then we're striving to get there. And that's how we're kind of laying out our drilling plan for at least for this second phase.
What about grade in that situation, based on what you've been coming up with so far? This is not high grade. The conclusion would be, I think, kind of high grade. The label with Nico is a little loosey goosey, but it starts at above 1%. That's kind of how I think about it. So, that 0.23 stuff like that. Is this going to be high enough grade?
So I think that, again, I'm not going to put any specific numbers on here, but just to conceive conceptually, say you had 1 billion tons of material. You go through a very simple magnetic. That's saying we do, saying imagine that you do. And this is important about what the metallurgy, what makes this project so special. Say you had that, you process that material through magnetic separation, crush, grind, use a magnet, separate it out. Very clean, very environmentally friendly, no chemicals involved. The material is super inert, and you end up with a 90% size reduction on the volume of material that you've mined. You're now sitting with 100 million tons at surface at 1.4, 1.5% nickel. So now I mean, what would you consider 100 million tons of 1.5% nickel? Is that significant? I mean,
Hmm.
I don't want to say it, but I think it is.
Well, finding it will be the challenging part, and as we're going through it, I have some bugs here trying to sabotage this conversation. So maybe it's the regulators listening and trying to
Yeah,
send these things
exactly.
in here. Um, I'm also wondering though where I'm going with this, and we'll talk a little bit about the specifics and how probable it is for you to actually get to that size and that grade in this setting in this type of deposit. But I'm wondering, given the state of the nickel market, it doesn't seem like any major producers are rushing to buy projects right now. So how do you deal with that? How do you not become just another nickel junior stuck between the rock and the hard place of the Lassonde curve, where you have that resource? Maybe it is good enough, but it's just not the right market. How do you deal with that part?
I'd say like this is the misstep and the misnomer in this industry, and that people, a lot of people get caught up in this, is trying to follow a trend, trying to follow a hot market and a hot commodity. The reality in the mining space is that it takes time, takes time to develop projects. It takes time to discover them. It takes time to build up the resource. It takes time to do the economic studies. And then it takes, a unique special scenario for it to go beyond that, and actually get bought out. But for us to worry about what the nickel price is or how many buyers there's going to be before we've defined the project, what we need to be focused on is defining a significant project that's going to generate that interest. I think we're in a very unique situation where we do have a strategic partner. This partner, is a significant. I don't want to say anything more because I'll get in trouble. But this could lead to an easier route for development and continued, engagement with major players that could buy or develop the project.
I'm wondering about that whole process here and how long it's really going to take you to get there and find something that anyone wants to buy in any type of market, because that's essentially the strategy they're going for here that you're telling me. So how long does that process take? I mean, if you look at typical Awaruite discoveries that have been drilled out, I know you have some comps in mind. I've been talking to Martin over at FPX. I know it's taking him a long time. How long do you foresee this process?
I think we have the unique ability of accelerating and doing things a lot quicker than some of these other projects due to the location.
Hmm.
Location is 50% of the equation. I would say 50% is actually having it. The other 50% is, can you do anything with it? So being in Newfoundland, it's extremely pro development. The government is pushing permits through for us in a matter of weeks. We were able to go from last year, we were literally in the middle of the summer picking up rocks. With the aid of Dr. Ron Britton, he literally picked up a rock and said, "This is what you want. Go find more of this." We turned around, we did more prospecting, found an area where we were seeing a significant amount of this material, and within weeks, like weeks, we were able to get drilling permits, be on the ground, drill out, initial footprint, show that there's, open-ended potential here that we can continue working on this, go back to the government, re-permit, expand the amount of drill holes needed. We actually went back and permitted new roads. We've constructed those new roads already. Where we were flying our helicopter on down the 30-kilometer trend, because not all this trend was road accessible because it's never been explored or developed before. Where we were flying down to that RPM zone to land the helicopter, to put the drill in the ground, drill the rocks, and take those samples and fly them back. We now have pickup trucks parked on top of that. Like,
Hmm.
you can't do that anywhere else. Like, this is just, that's what makes this project unique, is the location, the openness of the government to allow us to do the work, to develop these networks of roads and trails, and to turning that around in a matter of weeks is just unheard of. I mean, I'm very well experienced in working across Canada, working in the US. The US is pretty good for permits for small stuff. Roads are difficult. And then obviously larger amounts of disturbance are very difficult. So Newfoundland is it's our secret kind of weapon that if we continue to have success, I see this progressing very, very fast.
Well, it's putting a specific timeline to it is of course impossible. So it's more important for me to see how you think about it than the exact answer that you'd give me. What about the number of meters that you're gonna have to drill to come up with that target? Which would essentially what I got from what you just told me is 500 million tons is kind of your threshold, but a billion is where you really want to get it to. How
Yeah,
much
so that's
drilling is
our target.
that's
I
your
mean, you can
target?
draw back, yeah, you can draw back to the comparisons of some of these other projects who are there, and see, what number of meters it took them to get there and their initial stages. Uh, for us, it comes down to wide step outs. We're currently running at 400-meter line sections and 200 meters long lines. The ability to have this, because we have this very consistent mineralization style. Like we're talking large scale. This is a chunk of the Earth's crust that we're drilling within. That's not a small scale geological feature. It's a very significant feature. And the alteration is different than a porphyry. Spent a lot of time looking at porphyries. Porphyries are awesome because they're big, large scale sources of copper mineralization at a low grade, but can be mined economically because you're doing it at scale. Those have big hydrothermal plumes essentially that are concentrating mineralization and magmatic injections of fluids, and those are confined to an area within the influence of those fluids. That's not the case in something like this. This alteration that happens within this unit of the ophiolite, which is we call it Earth's crust, the ocean crust. The alteration that happens there is called it's a crustal scale, like kind of structural regime uh, that the rock is subject to. So it's called metasomatism to be exact. And it's the conversion between the nickel minerals that you normally can't extract nickel from into a form of nickel that is easily extractable. That's a natural process. It happens in most of these ophiolites. What makes this one so unique is there's no sulfur, so the nickel doesn't go and bind with the sulfur, has nothing to bind with, so it forms with iron. It's 3 parts nickel, 1 part iron, and it stays in a metallic form. So not only is that mineral highly magnetic, it's ductile, it can be easily recovered, and it doesn't need to be smelted or processed. So you're cutting off, like, you talk about mining and all these economics of mining. Well, sure, mining is the same process, but what do you do once you get it out of the ground? We
Mhm.
don't have to go and have that 30% value consumption cost downstream, sending it around the world to smelters to find areas where there is smelting capacity, because smelting capacity is limited. Smelting is a dirty business. There's less smelters that are going to be permitted unless you're in China. Maybe, they don't care about the environment so much, but that, you would have to be mining and sending a sulfide mineral somewhere where they could process it. We don't have that. We have something that can be easily processed on site, and is there at such a large scale, and it's extremely unique. And we're so excited about it. But it's an educational thing that we're trying to to teach people about because it is relatively not well known.
Mhm. And again, I do want to get to that, and some of the geochemistry behind it as well is interesting to me when it comes down to Awaruite deposits. How much is a meter of drilling costing you though up in central Newfoundland?
So we're going to see a significant reduction in our meterage cost because we've now gone from helicopter drilling to ground-based drilling. So it's hard to say right now, but I expect to see it come down below $300 a meter, based on now having the ability to have an established permanent camp in the project area and have road access into the camp.
Assays too, $300 a meter plus assays, or is that drilling alone?
Well, the drilling should actually be quite a bit cheaper than that, but when you include, everyone calculates the drilling cost a different way. Do you include assays? Do you include your geological staff? Do you include your prospecting work as part of that program that the camp's based on? Do you include the camp base? So there's a lot of ways to manipulate those numbers. Um, but in this case, with assays, there's no simple assay to be done here. A simple assay is to say we have 0.23, 0.25% nickel
Mhm.
and just be happy with that. But reading and learning about this project, that's not enough, right? We need to actually know about the metallurgy. We need to know about the separation of that nickel to know that it's not just a nickel in silicate that's bound with another element that can't be easily extracted without dumping a ton of acid on it. We need to know that this nickel is in a metallic form that can be pulled out with magnets. So every assay that we do includes a metallurgical test. Unfortunately, in that case, it drives the cost of assaying up higher. We're looking at over $100 per sample,
Hmm.
but this leads directly into the economics, right? This is something that we don't need to do later. We're essentially doing the metallurgy test work upfront, and we've actually done moved to that. So we're doing that. We haven't finished it yet, but people are giving us a hard time for not having results out early. Look, we're developing a methodology this is not, an exact, like, it's not an exact assay, it's not an exact reading. You're actually messing with physical parameters of crushing and grinding and strength of magnets and different flow rates and everything
Mhm.
that change the numbers. Like the DTR, people think, oh, well, we just report what a DTR number is. Well, the DTR, I can tell you, can change drastically based on how you process it. There's many settings that if you adjust, it'll change what the result is. So, obviously we're doing that as, effectively as we can with all the standards that have kind of been developed over the last 10 years in this kind of processing. But we're actually going towards doing a full kind of real world test where we're taking a composite of material, we're going and processing it through magnetic separators, like real roller, like a drum roller, like a giant pizza roller, my colleague likes to say, where that it rolls and it picks up the magnetic grains and then scrapes them into a bin. So that's not just like in a test tube. Like this is a practical real world scenario where this is just a smaller scale of what would be done, in an operation. So we're doing all of this up front, and I'd say it's extremely rare that you get a copper explorer or gold explorer doing all of the metallurgical testing while they're in the discovery phase of a project. But because of the uniqueness of this mineral, because of the simple, process, it's not a challenge. Like we know we're doing this because we're proving that it is simple and that magnetic separation does work. And you can end up with a 60+% nickel concentrate that could be sent from your mine site directly to an end user, a battery uh, plant or to a stainless steel mill.
Mm.
So cutting out a lot of that nonsense of smelting is a huge deal to us. And we're trying to educate people about that process.
So much so, really, Adrian, that sometimes I would talk to gold, silver, copper explorers that have done a whole lot of drilling, 10,000 meters or more, and they almost get offended when I bring up metallurgy. They're like, it's way too early. We don't even want to start to think about
Yeah.
that. What's really the point of a project, though, if you can have all that mineralization, if you're not able to pull it out of the other rocks, what's really the point of having that mineralization in the first place? So I'm right there with you, and that I do understand where the additional cost comes from. How much money do you have left right now after the loan, which I want to talk about, as well as the flow through?
Yeah, I mean the loan is an amazing injection of capital and show of support
Mm.
from our strategic partner, um, and it fully finances us for the next phase of drilling for phase two here. So we have well over 3 million in the bank. Just brought in some additional flow through dollars to top that up to really give us a level of comfort to go out uh, and pay for the next phase where we're planning to begin. We've already announced that we've mobilized everything to site. We've announced we've completed the roads to get in there. The camp's been completed. It's really just we're just in the process of turning the machines on, and uh, and that's going to be the next kind of exciting phase of this project development when we start expanding and showing now we've made the discovery. Now, how big can it be? And that's
Hmm.
that's what's really going to tip the scales for me is when you show that it does have that, you know, mega pit kind of scale to it that, just in the first case scenario, having one operation that could be in production in one area. And then, we're looking to move and try and expand this and potentially having a second discovery of an area that could also be potentially economic would uh, would really be the kind of icing on the cake. But just expanding this and showing there could be one operation here that could have 1 billion+ tons of material contained like that to us is the goal. And I think that's very achievable within a short period of time due to the consistency and scale of this mineralization. We can define a very large tonnage in a short period of time by just doing wide spacing and tying that together.
Tell me more about that loan, though. I mean, I looked at it rather briefly, but I think I kind of get the gist of it. What I'm thinking about is what's the catch? I mean, I get it's structured a bit of an in a non-traditional way. It comes from your strategic partners, so maybe that makes sense. But why I'm asking is because well, why not structure it as a traditional royalty or a JV or like, yeah, what's the catch?
I mean, the idea is to bridge the gap. Like the company that our strategic partner understands that there's capital required, and a lot of capital is risk adverse. They don't want to take the risk. This company is, or this entity is not like that. You know, they're giving us the ability to go and do the work and discover something. They're giving us 5 years with no interest payable for 5 years, unsecured. So if it doesn't work out, like the company doesn't actually secure it. So it's an unsecured royalty. So there's no lien. There's no lien against the property. If we can't pay back the loan, they don't get the rights to the property. I've seen that before. That's can be a dangerous spiral where maybe they don't want you to be able to pay it back so they can take your asset. That's not the case here. We tied it to a royalty, but we tied it to a royalty on the non-core claims, and that was because we didn't want to add a royalty to the existing claims that we're focused on, because that long-term economics could be affected there. So we did it as a way just to have some kind of backup that they would get something. But it's really, there's no catch. Like they're giving us the runway to be successful. And I think that's just so rare in this industry. I mean, I get calls every day about these sharks, loan sharks trying to give you money or interest and debt spirals. And
Yeah.
so this is not like that at all. Like I would never touch that. That's, I've seen that's we call it the death spiral, right? Like you get into a situation where you're forced to convert debt to equity, and you want to be able to do it on your own terms. Like you want to be able to be successful and have the ability to do it on your own terms, not be forced into doing it. So this loan from our strategic is non-convertible,
Hmm.
and it doesn't have any interest payable or any payments for 5 years. And it was structured as 5 years because we figure that's an adequate amount of time to get through to a stage where you'd be at a full feasibility and basically be able to look at it and say, is this, going to be bought out, or have, major investments that could take care of this, that you could essentially be making construction decisions at that point. So ample amount of time, no heavy requirements from the company. Really, you'd look at this as if you're an entrepreneur, this is like an angel investor kind of scenario.
Hmm.
So yeah, pretty unique, and I've never seen it. I'd be curious if anyone else can send in a comment, seeing if anyone else has done it on these terms, because I haven't seen it.
Well, that's exactly why my first reaction was, "What's the catch?" I'm glad you're also there's your timeline. I mean, you said 5 years is what you think is going to be ample time for you to get to a point where you feel more secure. Um, let's go back to those plans and what you want to do with that money. Phase two drill program. You said it's almost going to start. Where do you go from here on out? You're doing step outs. So you're going to keep doing those 400-meter step outs. Where do you step out to? I also know you want to go deeper. How deep do you go? Tell me more about that.
Sure. Yeah, the drill plan, phase two, especially as being our next phase with the significant capital to go and do this drilling, is really based on what our end goal is. Because we're dealing with such a large scale system here, we have to utilize the drilling meters as effectively as we can. We don't say, for example, we went and drilled 700 meters deep. Well, if we were to put a pit shell around it and that pit shell only goes to 450 or 500 meters, those last 200 meters would have been wasted meterage because they
Mm,
wouldn't be falling within your intended resource um, envelope. So we're looking at, now that we have an area where we know we have good mineralization, we have a pretty good indication based on surface how long and how wide this is. We think it could be actually a lot wider based on our recent hole 3 that we announced, being that, it extends a lot further east than we had initially thought. And there's good mineralization and grades coming out of a very heavily faulted area where we just couldn't really see it because it's so broken. But so we're putting this plan together based on putting a conceptual pit around it and saying, how do we drill within this pit, and how many tons do we need to make this work? And so when we look at it, we say we need 1 to 1.3 billion tons. We could operate for 25 years at 100 120 or 130 or 140,000 tons a day operation. Again, this is conceptual, and that we're talking about in order to say, well, what do we need to do to get there? So I'm not saying like this is our goal is to be in a situation where we can start to look at those kind of economics, but we're working backwards from that. We know what the end goal needs to be. We know what size of area we have, so we're just putting a big line, a big circle around what it would take to achieve those goals, and we're infilling that area as we go.
How deep do you want to drill this year?
We're trying to average between 450 to 500 meters. Again, because a conceivable large scale open pit, uh, I think that would be the maximum kind of depth. I mean, there's potential to go beyond that, but that's, within the economics that we're looking at, I think that's pushing it. And we want to make this thing attractive as possible for real partners to come in.
Hmm. What depth does the magnetic susceptibility? Oh wow, it's late for me. It's over 10 o'clock. Susceptibility drop off at RPM.
Uh, well, so the magnetic, like anomaly, I guess is what you're referring to, the magnetic susceptibility. So this is showing us where we have our ultramafic package. It's, in the pipestone, the pipestone is what the ultramafic belt is called. It's the ophiolite belt, but it's an ophiolite. It's a chunk of the Earth's crust that has been accreted, smashed into the continent. So it's unique in this location compared to other locations in Newfoundland where you have flat-lying abducted ophiolites. In Pipestone, it's fairly vertical. So you're taking, a big chunk of the Earth's crust where the bottom layer of that crust is closer to the mantle and is enriched with nickel and iron and all the stuff that everyone knows is in the core of the Earth. So it's richer at the bottom. And you slam it into the continent and it gets kind of tipped sideways. So this is really has no depth extent because of the scale of the geological structure that we're looking at. So we're looking at, within this mafic unit, this ultramafic unit at the bottom of this ophiolite sequence, where we have all this nickel enriched, we're looking at a kind of area that's been preserved, at least 30 kilometers long, consistent high nickel through all of it. And it's been altered and serpentinized. So the nickel has been released from the primary silicate minerals, so it's potentially available. The depth extent of that zone, because this metasomatic process isn't constrained to a hydrothermal cell, that's going to go deep. The problem is the economics start to wane as you go deeper. This has to be, within the top 500 meters, and that's what makes this unique because it's sitting at surface. It's at least 500 meters wide. It's at least, several kilometers long. I mean, there could be multiple zones like this along that 30-kilometer trend. We're focusing on the one where we believe the economics are the best out of the gate. We're focusing on building a significant volume of material there. So there's a lot of other things to get into about the depth extent and the potential because this ophiolite is such a unique rock that we've been talking about a couple different things. In other features and other potential byproducts with this type of material. But again, like those would be secondary. Like the primary thing is the nickel works. If the nickel works, that opens up the opportunity for all of these other things to happen as well.
Why I ask you about the depth extent is because I was thinking if there's some sort of a signal of zonation, if you will, or whether it's just magnetite lost after a certain depth.
No, it's it should be consistent. We've seen that like from the top of the drill hole to the bottom of the drill hole, as long as we're within the what we call the peridotite rock, which is the high kind of mafic content of rock, where we have a high content of olivine, olivine being the primary silicate mineral that contains the nickel. That's the primary source of the nickel, and the metasomatic process breaks it down regionally, like on a crustal scale present. And hydrogen gas is something we've been talking about a little bit, but the hydrogen gas is actually what's responsible for reducing the nickel and iron ions into a metallic state so they can form an alloy. So without hydrogen being present, you wouldn't have this unique, highly magnetic alloy, which is pretty cool.
Hmm. That I think we'll get to that here in a second as well. But now that you're talking about that, or that you're mentioning depth, I'm thinking about planning this drill program specifically from a structural standpoint as well, and how complex that might get. Because I believe you had to terminate hole three. I was actually trying to pull it up here to see if that's right, but I believe you had to terminate it early because of heavy faulting. So, how much of a challenge is that going to be, or what is the what is the again
Yeah,
structural?
I'd say phase one is always a learning experience in any project. So we've learned our lessons. We're now going back uh, with a more powerful drill rig. We'd be starting with a larger diameter core so that it is able to deal with more heavily broken material a little bit easier, and then getting down ultimately a little deeper as well. So
Do you have to go
lessons.
NQ or HQ?
So ideally, what we're looking at is starting with an HQ and then sizing down to an NQ.
Okay.
That's something that's pretty standard that we've done a lot for drilling deeper holes. Again, 500 meters isn't necessarily considered today as a deep hole. I
Hmm.
think 20 years ago it would have been a very deep hole, but the progression of the industry has definitely gone deeper. But we're looking at the economics of an open pit operation on a large scale here, and that's still, that's still the 500 meter and less kind of range, and I think that's what we're seeing on our project is we're we're building that tonnage in that range. Um, and to go deeper than that, I think the economics would have to be different. So luckily here, you take a porphyry system is a good example because it's a low grade thing that has similar economics. It's all about scale. They're going deep. They're going 800 meters deep or a kilometer plus deep. But when you're down a kilometer, that material needs to be like a percent copper equivalent in order to make the block caving operation work. So they have this, and because they're in this cell, it's this confined system. So it's high grade, but it's deep. Instead of having that, like the upper portion of the pit in these systems is much lower grade cutoff due to the economics of just the easily accessible, there's no underground shafts or tunnels or ramps that need to be driven in order to get the stuff that's just sitting at surface in the pit. So you're taking the size of one of the largest scale porphyry systems in the world, and you're just taking that big column and you're just plopping it onto its side, and then all of a sudden all of the material fits in that, cheaper, economic, lower grade cutoff kind of scenario. And that's what we're looking at here. We're looking at this extenuated long system at surface where we're getting consistent grades, which is very important for these large operations. You want low variability. And yeah, I mean that's how this works. So that's why I would say that we're focused on getting down to a depth where it's feasible to include in an open pit long term, talking like 20, 50-year kind of mine life. Again, that's too early for us to say, but that's what we think about when we say, what do we need? Like like what's the point of doing something if you don't think you can get to where you need to be? We're
Sure.
seeing where we need to get, and we think we can get there.
That's not fresh peridotite that you're dealing with, though, right? It's fully serpentized.
It's mostly serpentinized, so almost completely. I think like this is again maybe getting a little bit too technical even for me, and that's something that we talk a lot about with Ron Britton, who's written papers on this type of material in the Journal of Economic Geology. If you're interested, you can go and find. I don't know if it's freely available because the Economic Journal does require a membership, but I've seen some free copies out there.
Well,
Um,
I'm
if
just really
you
wondering about the rock density. Really, that's why I ask you because I know that if it's fresh peridotite, it gets you up above three, I believe, and if it's
It's a
fully,
little less, yeah.
yeah.
Probably closer to 2.7 or something
Okay.
in that
Yeah, well, that's
range. Yeah.
that's really all I needed. So that's fine. Thinking in depth extent, essentially thinking about volume by grade by density. That's where I'm going with this. What's the primary control here, by the way? I mean, the on the Awaruite emplacement across the entire 30-kilometer belt. That's what you're dealing with here in terms of size. What's your thesis and what's controlling that?
So, I mean, this is a natural process that does happen. It's the fact that there's a lack of certain things in the system. So the lack of sulfur allows the Awaruite to form. But also like the serpentinization, if it, we were just talking about if it continues too far, then it can start to take away the nickel from the system because the fluids are then fully serpentinized. There's no new nickel being introduced, and those Awaruite grains stop to grow. So this system has stopped in a in the right place in the progression of the formation where it hasn't started to degrade the amount of nickel that's in there. We're seeing that the Awaruite is still present. But again, like this is the control is just the right rock types under the right conditions uh, with the right chemistry. So that's, hard to find. It makes it very rare for this situation to exist. I mean, we do see that in one other location in BC, and we have an expert on our team that's actually been, very heavily involved in that and says, the mineralogy is very similar, which is a good thing, right? We want it to be similar. We want to be able to compare to that. There's certain things that make this project a lot better, like the location for one. It is heavily broken. It could improve the economics of mining. But our ability to continue to advance this project without being held up by any kind of regulatory oversight is pretty special. And I think our plan is to push it as fast as we can. We're obviously jumping the gun. Like over the winter, we went and we did construction. We built new roads. We built a camp, and we mobilized everything out there to put ourselves in an amazing position here, where we're grid drilling on an area using ground-based drilling, which is going to be a lot quicker and more efficient, cost
To your
effective too.
point of the geochemistry there, are you dealing with geochemical zoning within the Awaruite zones, more nickel or larger grains within as the depth grows or as your strike length grows?
So there's a little bit of a decrease in the weathered zone. We're still trying to wrap our heads around all of it. But once you're into like the kind of more solid bedrock, it's fairly consistent. Like there shouldn't be a general uh, zonation and depth because of the style of formation, but we do see that over the length of the property. Obviously, the RPM zone is the best zone that we've found to date, and that's why and it's a significantly large zone. Like it's not just the RPM zone; it's the RPM zone, the Chrome Pond zone, and all the way up to the Pipestone zone. It could have essentially be all connected. But we do see a general zonation in the grain size of a Awaruite formation between the north end, so 30 kilometers away to the south end. So that's like the kind of distance of zonation. So it's not I mean, locally you do get, certain conditions, you'll maybe get better visuals for less better visuals. But as far as, what we've seen in the drilling, it's extremely consistent. Like there's not a difference between the top of the hole and the bottom of the hole.
Hmm.
In the one case in hole three, we could get secondary concentration or enhanced wire formation due to the amount of like fluid pathways and in the faulted area. So there are more fluids, more surface area of that broken rock could have led to more wire formation. But that's something that we're discovering as we go. And that's it's a good problem to have when you have more mineralization that you didn't really think was there, didn't know about. Um, it's yeah, it's definitely a good problem to have.
Um, that's kind of like finding some money that you forgot you put in the back pocket of your jeans or something like that. It's always better to have more
Yes.
of that. What's the age of the rocks that you're dealing with there? Newfoundland, I guess it
Yeah,
around 500 million.
yeah, I was gonna say around the 450 or so.
Okay. So what I'm seeing here is right because what I'm looking at or trying to find is your comparison to FPXO, the car and Baptiste. They're much younger rocks, right? They're 200 million, 250, stuff like that. How do you how do you reconcile that? I mean, your a field line is much older than what their stuff is essentially.
Mm. Yeah, I mean, I talked to Ron Britton about that as well, and his comment is, well, you've had more time for the rocks to be altered and form wire, right? So It's like the difference between, a volcano that's erupting today and a volcano that erupted 100 million years ago. Like the process is the same, right? The volcano doesn't change that much over the 100 million year time difference. It's the same process that's driving this. They're formed in different locations on different continents at different times, but the process that formed them is very similar.
Hmm. And you still believe it's just preserving the primary mineralization uh, over
Yeah,
here.
we have a pretty good understanding on the process and the source of the nickel, and the chemical evolution of the nickel in the minerals and how the minerals change. Like this is something that's been extremely heavily researched. And this is something that we're doing a lot. Like, we talked a little bit about travel costs and all this stuff. Well, we're going down, we're meeting with the US government because the US government is very supportive for critical minerals that we're seeing. They have a lot of programs that maybe don't give us money directly, but we're able to form partnerships with some of these groups that we're working on. Some we've announced and some we're still working on building. But they're looking at this, and it's like university studies about how to extract the most amount of critical minerals from this ultramafic rock, right? Like
Hmm.
right now, we're looking at just the easiest low-hanging fruit. Say, like, let's crush, grind it, throw it through a magnetic separator, and we're going to end up with a nickel, and off we go. Let's forget about the rest. They're looking at it and saying, well, frick, like, let's look at the rest. Like, let's see how much more you get. So it was one of the downsides of reporting everything just with the DTR. Like this, just because it's the technology today doesn't mean it's the technology of tomorrow. Um, but that's, we're focused on what we can do today. Obviously, we're worried about what's economic today, and that's what we're focused on. But, there is developments, and those developments come from this research on the chemistry and the evolution of this material. And they're looking at nickel, they're looking at chromium, they're looking at cobalt and these other minerals that can come from this material. And they're doing it because the government's funding them to go do this because it's in the best interest for, the US and North America or Europe to have a secure supply chain, right? Like right now, we're in a very precarious situation where the market's being manipulated, it's being driven down. We have China controlling the majority of nickel produced, and Indonesia is a big part of that. And they're doing it in a way that's not sustainable, and they, may not be doing it in China, but the Chinese do control it, right? That's a very
Hmm.
public fact that this is happening, and so there's a lot of interest from these governments that in North America and Europe that are looking to find alternatives, and so what we're doing with the Awaruite with the nickel alloy is something that's economic now. What they're looking at is what else can we do? We'll fund programs to do research to figure out ways to pull additional things out of this, to maximize it, to really, because then it applies beyond just what we're doing. Like they're all these different groups, they all kind of start doing backflips when they start talking to us because we're already doing it. Like we don't need to be fully reliant on government funding in order to do this research. We're already doing something that has an economic interest from major, from the market and major companies right now, strategic investors, and and then we can add the research to it to improve it.
Hmm.
So it's kind of a very unique scenario. But yeah, I mean it's all about the chemistry and the mineralogy and the process. So again, it's a big part of what we're doing. We have it, fairly well nailed down. We understand how we start with, the primary rock and how we get to an Awaruite. Our focus is to, kind of now that we understand it, well, how much of it do we have? That's, how we make this project successful is by proving that A, we can extract it, concentrate it, have, not get rid of this need for smelting, but also that we have, enough of it.
Hmm. The mineralogy, the metallurgist actually here is a good it, it's something that you're relying on heavily essentially for it. The business case, as far as I could hear here, depends heavily on it. So we might as well talk a little bit more about that. But have you logged a lot of veining or any veining or even some Brit? Oh my God, I'm not going to be able to pronounce
But you,
anything. I I swear I normally can pronounce at least some of these things, but brecciation
yeah.
here. or anything else really what I'm thinking that could have introduced contaminants cutting through the Awaruite zones? Is there anything like that you're dealing with here?
No, so there's not a lot. So the serpentinization process actually kind of self like auto brecciates or brecciates the rock.
Mm.
So you end up with a very veined texture throughout, but that's due to the volume change when your silicate minerals are becoming hydrated. It actually increases the volume and it forces the rocks to expand and creates a breccia, pseudo breccia texture.
Mhm.
So we do see a lot of that. As far as I think what you're referring to probably is more like secondary overprinting
Yep.
of mineralized fluids coming in, bringing in contaminated or other minerals that would be detrimental to the
Yep.
metallurgy. And so we're not seeing a lot of that
Mm.
or any of that at all. Like maybe over and once we haven't really drilled through a major structural regional fault system that's off to the west of the RPM zone. We haven't drilled all the way through that. Potentially, when we get to the far side of it, because it's over 100 meters wide, there could be an introduction of some fluids there. But we're proven that there's at least 500 meters already that's open-ended, and we haven't even started to get into that. So, if there is over there, we'll just stay away from it, but we haven't seen any indication that it's there. Um, and this is one of the comments that talking to our lead technical advisor about is that in the comparable deposit, they have a lot of secondary dikes that cut through it. And so those dikes add these kind of waste rock regimes into their resource model. We don't have that. There's another potential improvement in what we're looking at and what we're doing is that um, yeah, we don't have any any secondary veining other than serpentinization, which is the primary uh, process that forms the awaruite. So it's good, right? Like we want it to be clean. And obviously, these secondary systems would introduce things like sulfides into the system, and that would, so that would also create like pentlandites or other sulfide minerals that we don't necessarily want to see
Mm.
um, in order to make this work. So we don't see any of that. We're looking at very large areas where we're getting clean up wire rate, no overprinting with secondary stuff that could be detrimental.
Am I pronouncing Awaruite wrong too? It seems like you have a
We
different.
all are. I think we all are. So the namesake of Awaruite is from New Zealand, from a place called Awaru Bay.
Okay,
So
so it would be aware. Yeah, I mean,
Awaruite,
uh,
based
I'll
on the
call.
namesake. It's
I'll
also called
call you.
Josephinite, yeah, as a US name.
I'll
But
I'll call you 9 hours. See if you can still pronounce it too. I
yeah,
think that's about the
exactly.
time difference. No, I'm just kidding. I'm blaming it on the time difference. I'm really bad at pronunciations most of the time. I should have exercised this in the mirror before the conversation. I know you don't have all day here for me though, Adrian. Any just one more thing that I wanted to ask you on the technical stuff. Any PG anomalies associated with your white zones?
PGEs? No, we're not. We've been testing a couple system or a couple areas for PGEs, but no,
Hmm.
they're generally associated with sulfides in the
Yep.
systems, and so as we expected, we're not seeing that. What we do have is cobalt that isn't something that's necessarily flashy out of the gate, but it's extremely interesting and potentially very valuable because the cobalt is actually in the awaruite grains. So the wire rate it's easily recovered with a magnet. And then once we have that magnetic concentrate, we can float that magnetic concentrate to get rid of the magnetite, and the wire rate comes out in the flotation very easily. And because it's such a significant size reduction or volume reduction from the initial volume of material that's put through the magnetic separators, it's fairly cheap and friendly process to concentrate. And when you end up with that almost clean awaruite, which is 75% nickel as a mineral, it actually has about 1% of cobalt, which is payable and recoverable at the end of the day. So it starts out when you're assaying it in our initial geochemical assays, it's very low, that it's not something that, people would probably laugh at you and say that's stupid. But when you're concentrating it to 65%, you have a payable product with cobalt. So that's a unique kind of another battery metal that is, critical mineral.
We didn't talk much about the chromium. I think you also have a zone that is very chromium dominant, if you will. How does that tie into the whole story?
Chromium is kind of just a natural mineral that occurs in these ultramafic settings. So it's not that makes it rare. What is unique that has happening that we didn't initially anticipate is that the chromium is also being concentrated in the magnetic separation process. And talked again our technical team about this is the when we're studying the thin sections of the rock and looking at the actual grain sizes and grain relationships, what we see is, in comparison to something like FBX where they have chromium there, but there's, say it's larger grains, what we're seeing is we have smaller grains of chromium that's disseminated throughout our rock. And those disseminated grains could either, have different chemistry that makes them slightly magnetic, but they're largely entrained and associated with magnetite. And when that goes through the magnet separator, it's getting pulled out with the magnetic concentrate. So we're ending up with a concentrated byproduct that we're then, it also has the nickel in it, but then we're removing the nickel from it. And once the nickel's removed from it, it's iron and chromium predominantly. So that's, potentially a secondary material that could be utilized in, for example, like stainless steel production that uses a very high chromium content and naturally iron as well.
You're not going to need a different, this is way forward looking, but you're not going to need a different circuit for it.
Not to get it to that stage, maybe to get it to the final saleable product. And again, this is something that
Sure.
we're working with different groups to research on. It's an opportunity that's on the table. And again, like this is, like I mentioned about some of these other things, like, carbon sequestration or hydrogen or chromium, like, these are all viable. It all exists, but the nickel needs to work for you to be able to utilize that or to make that work. So our focus is on the nickel, and we believe that what we're doing with the nickel is significant and is potentially economic. Uh, and that's all these secondary things are exciting that we want to be in a position to take advantage of, when we start to do the feasibility and economic studies.
Hmm. It's a good thing I put up a forward-looking statements disclaimer at the beginning
Yeah,
of this video because this is
appreciate
way
that.
forward-looking. But it's important to understand though, and it's important to have an idea as to what you want to do with it. But let's again, I know you don't have all day, so let's quickly go through some of the logistics here. If you community relations, First Nations, I know you touched upon it earlier. What are you dealing with? What's the situation there?
So the community is very pro mining. The majority of Newfoundland's economy is resource dependent. It's, oil and gas. There's huge amounts of iron in the province. Gold, copper, very heavily, and obviously fishery is heavy export uh, resource industry in Newfoundland. So very open. Everyone understands that there. The communities are more than happy to have any kind of economic benefits come from, our operations in the area or in general from any mining companies' interest in the area. So we haven't had any issues. We haven't had any setbacks. All of our work with permitting with the government has been, um, very fast and efficient. So yeah, really, really happy with the situation there. We don't have any direct large scale government kind of involvement, but the government, of note, I want to mention this is the government does have a junior exploration assistance program, and they did just give us $150,000, which is, very, useful in this early stage. It definitely helps us progress the exploration. And I think, we're applying for that again for 2025 for the work that we're commencing. And I believe that with the current environment and the way things have gone, that we'll probably receive another amount in another similar amount to that.
Hmm. So you don't expect it to cost you too much money, or like, what are you budgeting for that?
For well, the permitting
I
is
mean, the
very.
community relations engagement,
Oh yeah,
getting
no, I
everything
mean
over the line,
it's that well that comes down to the permitting,
right?
and so yeah, there's no additional consultation needed. You have to go through, ensure and show that you're doing everything in an environmentally conscious way where you're not creating adverse impacts. So that's kind of the level of permitting, is that it's about doing things sustainably, and we have a track record where we've been able to operate and be sustainable, and not create any adverse environmental impacts, and that's the main thing that the government is concerned about. And that's something that is Canadian mining company, we've grown very good at, is doing things in environmentally friendly and sustainable ways, and that allows us to just cruise right through these permits, the process and the consultation, and so yeah, the cost is extremely low. Like
Hmm.
we do it all internally. We don't hire any third party consultants. We don't hire lawyers. It's literally filling out paperwork internally, submitting it, and waiting 3 weeks, and then making plans to go and implement the programs that we've laid out. And then on the back end of that, we do something similar with the government programs, and then we get the cash back, which is always nice.
Yeah. Any national parks, specific protected forests, ecological reserves, protected mosquitoes, daisies, anything like that?
Not in the project area.
Hmm.
So there's
Anywhere
no, I
close
mean, it's
by?
very, there's parks everywhere, I would say, but nothing that would be close to the project to create any issues.
Hmm.
It's very flat, open, swampy, lots of, puddles, makes it difficult in certain areas to access, due to the swampy kind of nature. But we've been pretty lucky in getting our roads built a lot of bridges. Um, you know, it's it's a pretty good place to have a potential mining operation, I would
Hmm.
say.
Good place for your geological team to operate in during the hot summer nights too, I imagine. With all the mosquitoes. What
Yeah.
targeted G&A, what are you targeting? I said about 110,000 bucks a month. It was what it came down to the last 9 months. It was marketing heavy though this period. So maybe talk to me about how much money you want to spend and whether marketing is still going to be that big of a cost.
I mean, it's so hard as a junior company to have a fixed budget, because you go through periods of exceptional growth and spending. To get growth, you need to spend. Drilling obviously is one of the highest costs that we do. Having It's not just the drilling, it's the staff, it's the vehicles, the whole operation, housing and operating and maintaining, and trying to get you know efficient drill meters out of these programs and doing the exploration. So that is a high cost, right? Like that'll go through phases of several months at a time, where that kind of just goes way up because we're actively exploring and pushing to develop the project. Marketing wise, that's also something that you can't not do it. You have to be recognized as being something. There's no point in having a great story if no one knows about it. But you can't do it when no one cares, right? You can't just, spend millions of dollars. Like you're not going to be able to do that sustainably. So you have to be very, I guess, strategic about how you do all of these things. And again, it's basically taking opportunities when we're getting busier, when we're drilling, when we're doing something that may be more impactful. We want people to know that, right? So that's when we would do more advertising, or do more interviews, or do more conferences, or try and reach out to other groups of investors, or maybe spend more time with other strategics. Like that's a big part of it too. Like a big part of the growth potential here is that we're going to get more involvement from players that aren't retail, that don't look to buy and sell stock, that just look to buy and hold for development.
Hmm.
That's where you can see real long-term growth.
We didn't talk much about your other projects. You've got plenty of them, as far as I understand it. What's going on there? What's really the plan? You plan on drop them, JV, spin out? What do you want to do?
We're looking at the opportunity to do, I don't want to get too ahead of myself here, but something with our copper project, which is a significant scale project that was, in the past focus of the company. It has, a lot of potential right next to the largest producing copper mine in Canada. We're looking at opportunities to create shareholder value for our shareholders, whether it's through, dividends of a potential uh, sale of the project or a spin out type scenario where the shareholders would receive shares in the new co. So again, that's just something we're considering. Again, our main focus is on our nickel Awaruite project. And then the secondary project we have in Newfoundland is the high grade nickel project near Voisey's Bay, which is definitely more remote. We've spent a significant amount of money there. Those that project is wholly owned. We outright own the whole thing. Uh, it's going to be long-term value in our portfolio because there's no requirements for us to spend or maintain. So we can basically do work on that as we see fit when we believe that it will add value.
Hmm. There's, I suppose we could do a whole podcast only on that project alone. Interesting region for sure. So there's lots to talk about there. How much is holding all these projects on your books costing you though?
So, I mean, Canada is pretty cheap to maintain projects. Like I mentioned in the high grade nickel project, there's no sustaining costs because we've spent the money, and the sustaining costs in a lot of provinces is in regards to how much money you spend annually on those. So you're allowed to spend money and push that, essentially pay off the amount of costs required over the next 10 years is the limit. In a lot of provinces, you can do it up to 10 years. So that's what we did. We pushed that project out 10 years. So there's no sustaining cost at all, period, for that project, which is what gives it, more value to us, is that we can be able to adapt to the market. If we start to see a lot more interest in nickel, like we're doing all of this in a pretty poor nickel market, but we're being successful because I believe there's always room for a significant discovery in any market. And when this thing does, gain traction, when we start to see nickel prices rise, and we're going to be sitting there as a project that's developed and is a significant new player in the industry that people will flock to. We don't want to be chasing. We're essentially doing this ahead of the curve. So we can do that with our secondary nickel project as well. We have that as value that we can, tap into when the economics are a little bit different. But for now, like we wholly believe in what we're doing in Newfoundland with our Awaruite project.
Hmm. What keeps you up at night? This is what I want to kind of start working toward wrapping it up, but nothing's ever
How
perfect. What are the main risks? What keeps you up at
many,
night?
yeah, how many employees do you have? There's a lot of moving parts, right?
Hmm.
It's this the you don't want things to fall through the cracks. Being a small company, we have a lot of people that are now relying on us to follow through in our promises that we're making. Because I believe, as a CEO of a company, you're essentially making promises to your shareholders. And so that, I definitely want to be able to look a shareholder in the eye and tell them that, yeah, I've done what I said I would do and what we set out to do. Obviously, you can never guarantee the results, but I can guarantee that we're going to do what we say we're going to do. And then that comes with a lot of responsibility. There's a lot of moving parts. There's a lot of people that we have working in the field. It takes a lot to build out. And as we grow, there's more people involved, there's more permits involved, there's more contractors, it's more moving parts. So making sure that everything, meshes together definitely is always on my mind.
What am I forgetting to ask you though? What did you come here hoping to talk about that I failed to bring up?
I covered a lot. I mean, it's
For
a good
sure.
interview, probably one of the longest interviews I've ever done. Um, but yeah, like I mean, you could talk about this for days. I mean, that's what we do. There's so many intricacies to these projects, and there's so many secondary opportunities that we don't really ever get to to push too much, but I would say that the nickel is the main focus, the fact that you don't need to smelt this material, that it can be processed in like three simple steps to get to a payable product that you can send directly to the end user. It makes it unique. The scale makes it unique, and the metallurgy makes it unique. That's what really makes it stand out. And the location, like we're going to be able to, pending success as we're trying to achieve in the near term, you're going to be able to do something in a region like this, and it's strategically located on the Atlantic Ocean. You can go to Europe, you can go to the U.S., stay within Canada. I mean, this is a very good strategic location and a very unique special project. So I'd say within the next program, we're gonna, hopefully see this continue to grow and expand, and we expect to, do large step outs with the drilling and show, highlight the potential of the size here and really kind of put a pretty significant footprint over this thing and show that it's got legs.
You're right. We could talk about this for hours unless I get eaten by bugs or the hay fever bleeds my eyes out, which it has been trying throughout the conversation. But Adrian, I really do appreciate your time. This has been great. Thank you so much.
I appreciate it. Thanks.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."